A strong investor appetite is being tipped for special purpose acquisition company or SPAC listings if they launch in Singapore. That's the word from experts as the Singapore Exchange moves to create a SPAC framework. The SPACs have become popular in the US, with the latest involving ride-hailing giant Grab, which is set to trade on the Nasdaq. It would be the world's largest SPAC deal. Heidi Young with more.
Called blank check companies, SPACs exist to merge and take private firms public. They give private companies a much faster way to raise capital and IPO. Some proposed regulations that SGX is seeking: a minimum market cap of 300 million Sing dollars and a 3-year deadline to complete a merger. The tighter rules aim to safeguard investors' interests.
The SGX has got a very unenviable role. On the one hand, they have to make sure that commercially they are a great venue that everybody in the world wants to come and list on and trade in. At the same time, they have to worry about the retail investors who may not be that sophisticated, and they have to protect them. And that's a difficult balance to strike.
Even with these additional safeguards and tweaks, experts say the Singapore version of SPACs is unlikely to deviate much from its US counterpart.
Where the SPACs have been successful is it's creating that access point to equity markets and that entrepreneurial spirit that sponsors have around both making deals, but also bringing their quality of business acumen to those particular deals. And so I think that Singapore is largely similar to what's in the US, with a few finer points to create that stability. What I would like to see, though, is maybe a little bit more lower threshold potentially to allow for much more deals to come to market.
Market analysts say SPACs are a force to be reckoned with in recent times. The funds raised by US SPAC listings in the first quarter of 2021 have easily toppled the whole of last year's. Southeast Asia's market is also ripe for the picking, with highly valued companies such as Indonesia's Gojek and Tokopedia looking to go public.
Right now, we have a vibrant scene for private equity here and also for venture capital. So in that sense, with all these potential investments that the SPACs could look into, we have those ready. We also have an increasing number of family offices in Singapore who are looking for the right investments for asset allocation purposes.
The SGX consultation is open until the 28th of April. It plans to take the feedback gathered to introduce a framework by mid-2021.